Hello and welcome to your daily dose of Satoshi's news. Today's date is Wednesday, the 19th of February 2025, the year BSV comes alive. Experience the best of both worlds today at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Right, let's get into it. So we've got this article here by Brian Doty saying blockchain versus cryptocurrency. Core differences. I haven't read this yet, but I'm very much looking forward to it. I hope it's correct. But if it's not correct, I will obviously be making corrections on it. But this should be very interesting. You know, are the tech guys finally getting into the economic fundamentals? We will find out. We've got this one, London blockchain, about, well, yeah, we'll talk about that when we get there. We've got an article here about Michael Saylor's post regarding the sale and buying of Bitcoin. Found the tweet there, so we'll have a good old laugh at that. Alex Farvel has been blocked by Jingles, and I think Joel Dallaire has pointed out that Jingles is actually Greg Maxwell. Jingles is definitely Greg Maxwell. Whoa, there we go. We've got some 365 days of Bitcoin history. Quite a big day today. The 18th of February. 19th of February, actually. 18th was yesterday. There we go. Yeah, checking out my Lament wallet. And then we'll just go through the figures as per usual, because they're going to get exciting soon. Right, let's get into it.
Greg says he's Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong, them transactions flying free. Just wait for the Terra node, you'll surely see.
Here we go. Right then, Brian Doty says blockchain versus cryptocurrency core differences. You can't really compare blockchain to cryptocurrency. I mean, blockchain is just simply a way of linking data together and indexing it in blocks. Like, another word for chunks. Blocks is obviously a lot more neater. So it says core differences. Right, let's see what this is all about then. He says, as policymakers navigate the rapidly evolving digital landscape, it is crucial to distinguish between blockchain technology and cryptocurrency. These terms are often used interchangeably, leading to misconceptions that hinder effective regulation and innovation. Definition. Blockchain is a distributed... it's not really distributed. Blockchain is just the chain of... well, effectively a chain of digital signatures and data linked together via hash numbers and indexed in blocks of data. And, you know, that a blockchain can run on, you know, a centralized foundation, like a proof of stake foundation, pre-mined foundation, or a distributed foundation, or a distributed economically foundation. I mean, that's what you really want, because you want to make sure there's no central point of failure. But anyway, so he says blockchain is a distributed, tamper-evident ledger designed for secure, transparent, and verifiable record keeping. It enables decentralized data management across the network, ensuring integrity and automated synchronization among participants. That's not really what blockchain does. Blockchain just stores data linked together so that it can't be deleted without deleting the entire thing. And then that entire data record is on a globally distributed, economically competitive server network, so there's no central point of failure. That's really what it is. He continues, for regulation and technical clarity, blockchain technology is defined by the following characteristics. Shared public ledger. That's not really what a blockchain is. Data is maintained across a decentralized network, allowing verified transactions and records to be transparently accessible to participants. Well, it's if the software is open source, it can do that. Like a proof of stake blockchain is not, could be a private one, as in like centrally controlled. Well, it is centrally controlled. You can deny access to it. Cryptographic security. Transactions and records are cryptographically linked, preserving the integrity and immutability of the ledger while executing additional security functions. Cryptographically linked. Linking a hash number with something else. Probably being a little bit pedantic here. It's not necessarily cryptographic. It's just a way of joining hash numbers. Preserving the integrity and immutability of the ledger while executing additional security functions. Automated distribution. Updates to the ledger are concurrently propagated across all network participants, ensuring consistency without reliance on centralized control. It can be open source on a competitive distributed server network. That's the only way you can have it, really, because on a economically competitive one, the coins are competed for, so they're not dished out like in a socialist manner. Blockchain extends beyond financial applications, serving as a foundation technology for secure data exchange. Well, it links data together. Enterprise solutions, legal compliance, and digital identity verification. Unlike cryptocurrency, which primarily facilitates financial transactions, not really. Cryptocurrency are securities, and if they're securities, it just means they're tokens. Tokens transacted to one another. Somebody might say they represent $1 or something like that, but they're just digital bits of information. It doesn't necessarily have to be financial transactions. Blockchain functions as infrastructure for diverse applications requiring transparency, security, and decentralized governance. Blockchain functions. Again, it's commoditized. Anything that's commoditized doesn't need governance. Like gold doesn't need governance. Gold is gold. Bitcoin is Bitcoin. It doesn't need governance. Infrastructure for diverse applications requiring transparency, security. If I was reading this, I would be confused about this. Probably tell by the sound of my voice. Cryptocurrency is a digital asset. Not really. Cryptocurrency is a security, and it's inflated by its very nature, which means it's economically toxic. Would you call something that's economically toxic like an asset? Utilizing cryptographic security and decentralized ledger technology. Again, it's not really decentralized; it's commoditized. To facilitate financial transactions, it serves as a medium of exchange, a store of value. No. Or an investment instrument, operating on blockchain networks to enable peer-to-peer transactions without reliance on traditional financial intermediaries. That bit's right. You're not relying on traditional financial intermediaries. For regulatory and technical clarity, cryptocurrency is defined by the following characteristics. Digital asset represents a unit of value recorded on a blockchain secured through cryptographic techniques. Well, again, so value is only derived through the economic forces of supply and demand, but then you have utility value and you have speculative market price, and all these cryptocurrencies have nothing but a speculative market price because they have no fundamental value. So when it's saying a digital asset represents a unit of value, not really. If it's a cryptocurrency, well, it has no value whatsoever. If it's a security, then it only represents the value of the item that it is representing, that it secures your entitlement to. That's all it does. These cryptocurrencies and these what they say is a digital asset or cryptocurrency have got no fundamental value at all. None. Literally none. That's why they're securities fraud. That's why the SEC is calling them out. Decentralized transactions enables direct transfers between parties without the need for banks or centralized financial institutions. I mean that's why they're decentralized. Immutable ledger. Transactions are permanently recorded on a blockchain. Well, if the blockchain isn't on a distributed, economically competitive server network, it's not going to be permanent. That's the whole point of Bitcoin. It's the only way to actually make data immutable, to make it permanent, because there's no central point of failure. Preventing unauthorized alterations and ensuring auditability. Fair enough. Programmability. Can incorporate smart contract functionality, enabling automated financial operations based on predefined conditions. We'll have that one. Cryptocurrency encompasses various forms, including payment tokens. Not really payment tokens; they're just digital pieces of crap that have got a speculative price attached to them. So cryptocurrency encompasses various forms, including payment tokens, e.g. Bitcoin. Stable coins paid through traditional assets. Again, I mean, the stable coins on an insecure network that will just be deleted. And utility tokens, granting access to digital devices. They're still worthless securities. They're just pieces of crap. Even if they do, quote here, grant access to a digital service, unless that digital service runs on the Bitcoin network, it's just a digital service running on a centrally controlled network like Facebook. So worthless. So therefore, you should just have membership. You don't need tokens, really. It is subject to regulatory considerations related to financial oversight, anti-money laundering, compliance, and market stability. Primary use: blockchain serves as infrastructure for secure data management. Enterprise applications, digital identity verifications, and compliance-driven solutions. Public blockchains prioritize scalability, legal transparency, and real-world utility. Well, the public blockchains, there's only Bitcoin. There's only Bitcoin that has real-world utility, and that's BSV. Cryptocurrency primarily used for financial transactions. Asset transfers, well, not really. It's just a cryptocurrency run on centrally controlled networks, making the tokens that run on them economically worthless. So how can they facilitate any financial transaction if they're economically and fundamentally worthless? So they're transferring a speculative market price on something that's digital. That's it. And investment speculation, that's all it is. That's literally all it is. Investment speculation is what cryptocurrency is. That is it. Some cryptocurrencies also serve as incentives within blockchain ecosystems. It wouldn't really be a currency then, would they? They'd just be tokens. Governance and control. Blockchain governance varies by network, but can be structured and transparent, which adheres to legal principles and enterprise-grade functionality. Again, I mean, blockchain and governance, the two words shouldn't really mix. Certainly not Bitcoin and governance. Yeah. Cryptocurrency governance is often decentralized. Oh, that doesn't make sense. Like, governance is centralized. That's what governance is. How can you have decentralized governance? That's like an oxymoron. With control distributed across communities or private entities, leading to varying degrees of regulatory oversight. It's either commoditized and therefore overseen by the Commodities Futures Trading Commission, because they can only regulate the futures trading of it because it's a commodity, therefore can't regulate it. Like, you can't regulate gold. You can regulate the futures trading of it, but not the actual commodity itself. So you can't regulate a commodity. You can only regulate the futures. You can regulate securities, all of them, because they're all securities. Regulatory considerations. Blockchain regulation focuses on data privacy, enterprise adoption, and legal compliance, e.g., contract enforcement, record authentication. Blockchain doesn't really... I mean, like I said, blockchain is just simply a way of linking data together via hash numbers and indexing them in blocks. It really doesn't have much to do with legal compliance and data privacy and anything else. Cryptocurrency regulation falls under securities, commodities. What? Cryptocurrency regulation falls under securities, commodities. Well, those two are completely different. You can't have one under both of them. And anti-money laundering frameworks within the US. Policymakers addressing market integrity, fraud, prevention, and taxation. Risk assessment. Blockchain risks include scalability, data security, and regulatory adoption. But law-compliant public blockchains mitigate these through transparent governance. No, I don't agree with that at all. Cryptocurrency risks involved market volatility, fraud, illicit finance, and unclear legal classifications, securities versus commodities. Well, the risks involved, they're fraud. They're all fraud. They're securities fraud. That's it. End of. End of. It's just people waking up and realizing that. That's it. Let's see what this is. Public blockchain policy and digital asset regulation. 30 legislative templates. I might have to look at that then, because I don't have any faith in their correctness at all. Regulation and innovation don't have to be at odds. When done right, they complement each other. My latest ebook, Public Blockchain Policy and Digital Asset Regulation, serves as a foundational resource for lawmakers, businesses, and blockchain advocates who want to shape the future of digital asset policy. From regulatory sandboxes to smart contracts, DAOs, decentralized autonomous organizations, governance, and tokenized municipal bonds, the comprehensive guide provides a structured approach to integrating blockchain into public services, financial systems, and government operations. Whether you're looking to enhance election security, real estate transparency, or supply chain integrity, this book is your blueprint to informed policymaking. But that's not all. To bring these policies to life, we launched the interactive app. By merging technology with governance, we can create transparent, efficient, and fraud-resistant systems that serve both the public and private sectors. Let's build the future together. What's this? Blockchain legislative framework. Statewide Blockchain Innovation and Adoption Act. Blockchain Regulatory Sandbox Act. Digital Identity Verification Credentials Act. The thing is, though, if you haven't nailed down the difference between a commodity and a security, then all of these are irrelevant. Because, like I said, data can only be commoditized one way. You're either dealing with a commodity or a security. And in the same way that they say a lie has many versions, the truth none, it's the same with commoditizing data. Data can only be commoditized one way, but you can make up an infinite number of securities, an infinite number of utter shitcoins, like an infinite. That's why the cryptocurrency market's got like 39,000 shitcoins on there. You know, I don't know how to get my information out there. I mean, someone like Brian really should be taking on board what I've said before going to all this effort and publishing that, really. But, you know, maybe we might get there eventually. Terranode's just going to blast all these shitcoins out of the water anyway. Right, check this out. So, London Blockchain Conference here just posted, said a blockchain will change how the UK government does business. Learn from top decision makers in the House of Lords. Seats are limited. Register your interest now. 4th of March 2025. Okay, well, this has gone through to the blockchain conference. 22 to 23 October. So that's Government and Blockchain Summit, 4th of March 2025. That doesn't look like it's a blockchain summit. That looks like it's a link to the blockchain London Blockchain Conference. But I mean, yeah, the 4th of March looks kind of interesting. Yeah, that'd be pretty good. Let's see. Yeah, alright, cool. Alright then. Right, let's get on to this. So, this is quite funny. Protos has said here, Michael Saylor thinks sales of Bitcoin weaken the network. Yeah, and this was regarding a post he put out there, so we'll get to that in just a minute. According to MicroStrategy, formerly MicroStrategy founder Michael Saylor, buying Bitcoin, or BTC with Gregcoin, strengthens the Gregcoin network while selling weakens it. Gregcoin is immediately pounced on this controversial claim. Their first critique is obvious. Selling and buying always occur simultaneously. Each Gregcoin purchase is also a sale, meaning there are always an equal number of purchasers and sellers at any time in the currency's history. Giving Saylor the benefit of the doubt on this, technically, most critics were fine to assume that he intended to say buying at successively higher prices strengthens the network, and vice versa. However, even this charitable interpretation of the actual mechanics of a financial market didn't clear much skepticism. That's where it was. A prominent Bitcoiner told Saylor to reread its white paper in order to fully understand its security model. Indeed, a higher or lower price of any particular transaction doesn't affect the strength of the network. Rather, the network simply transmits, validates, and protects transactions. Bitcoin's white paper only describes a system for peer-to-peer online payments without a trusted intermediary. That network still processes each peer-to-peer transaction in exactly the same way, regardless of at what US dollar price the payment occurs. Critics also blamed Saylor for downplaying the role of Gregcoin's velocity. In actual fact, transacting frequently, even at the exact same price, often strengthens its network effects, increasing the liquidity of a commodity, regardless of its price. Shouldn't be using that word there, but we know what they're doing. Eases its day-to-day utility and encourages user adoption. In defense of Michael Saylor, a final cohort of critics attacked Saylor over issues that stand apart from his core proposition. For example, some blamed him for promoting a MicroStrategy as a paper contract backed with some BTC plus various business assets. Others blamed him for using Ponzi scheme promotional language to talk about BTC. Yeah, he definitely did that. Of course, Saylor fans rallied to his defense, pointing out that obviously the price of BTC transactions affects its market capitalization. Miners in turn decided to expend resources when the USD projected BTC towards BTC rewards exceed the USD projected operating costs of electricity, equipment, and overhead. In this sense, buying BTC at successfully higher prices incentivizes miners to use more hardware, expend more power, hash faster, and raise more capital. This does in fact strengthen the Bitcoin network. With more hash rate, oh yeah, maybe. Whether this most charitable interpretation of Saylor's tweet absolves him of many other errors is certainly not a settled matter on social media. The tweet earned millions of impressions and garnered thousands of mostly contentious replies. And let's have a look. He said, when you buy Bitcoin, you strengthen the network. When you sell Bitcoin, you weaken it. And Jameson Lop has just put, when you buy Bitcoin, someone is selling it to you. When you sell Bitcoin, someone is buying it from you. Yeah, that is right. I think Michael Saylor is basically using pumpermentals there, really, trying to get people to buy it. That's it. Moving on, then check this out. Alex Farvella said it after years and years of abuse from Jingles, possibly Greg. He finally blocked me because he knows I now speak their language, and I'm about to teach it to you. It's straightforward. And this is a great post here. And yeah, Joel's Dahlia said Jingles is definitely Greg. And listening to the interview that Kirk has just done with Mike Hearn, he said that somebody from Reddit contacted him with regard to the Bitcoin XT Reddit account, and somehow Greg Maxwell has been able to get control of that. Literally, Blockstream, Greg Maxwell are literally the technical head or the technical arm of the deep state. That's what they are. That's what they are. And that's how they've been able to do it. Right, let's have a listen to this from Alex Farver. Some fantastic investigations here.
So someone just asked me why I'm looking for hidden messages in these emails, and that's a fair question. And it all started with them claiming that Bitcoin is one of their own, in that they invented it. I was wondering how they invented it. What insight did this core group of cypherpunks know to invent Bitcoin in the way that they did? And then, why did they want to change it? Why did they want to change the signatures? And that just made me curious. So I started reading. I went right back to the beginning of the mailing list and tried to read everything. It's not that much. You can do it in a couple of days without reading everything, but, you know, looking at everything, seeing if it's relevant to what you're looking for. Well, this email came of interest to me because at the time, spam started to become a thing on the mailing list, and it started to get a bit of an issue. But this one was early, and this one has very weird, intentional mistakes in it. I'm dyslexic. I make spelling mistakes, grammatical errors and stuff all the time. These ones aren't natural. The change in the phrases, the fact that that name does not appear anywhere in this email, all suggests that it's something of interest. Especially the fact that these mistakes, capitalizations, double space, extra space, double space, capitalizations, commas, extra space, they're not natural. To explain everything, I effectively have to write a book. Here is all the reasons why this spam email is interesting. Knowing that this company existed in 1996 is also important. And there's a hint.
Wow, check out that investigation. That is epic. Well, let's see what he says here.
Alt cypherpunks a lot. When I was a kid, I read alt cypherpunks a lot on Usenet.
Airplane.
CIA?
CIA.
They're already coming?
You think it was something you said?
Just being so inspired by the people on alt cypherpunks and the ideas.
This is Adam back. He is the crypto king. Not only is he a BTC legend, but he is also one of the first ever cypherpunks. Let's read some emails. I want to start with a spam email because spam emails are the best for sending secret messages. How do you leave a secret message in a spam email? With instructions. Remove the quotation. It's just a spam email. It doesn't mean anything. Well, roof means racket, and the Taliban have been doing this. Spam emails so they're not searched by surveillance filters. But who's the contractor? Jim Daniels. JD Enterprises, we have this guy, James A. Donald, that has the email address consistently, James D. Echek, so kind of similar. He owned Jim.com. That is now a payment network, which is run by CloudWalk, and CloudWalk is identified as a Chinese military company operating in the United States. Now, James Donald was done for that. Which one do you think he is? At the time of that date, Adam Back was emailing our James Donald. Keys are typically and commonly stored in the cloud. So the email, oh, wrong one. So as I was saying, the email, oh no, this is the wrong one again. So the email also mentions pizza for dinner. Really weird way of saying it. But if you look at this list and you follow the instructions, you get a name. High schooler could do it, and there's a checksum. That name is Timothy May, and he told us what to look for. Oh, but Alex, you're just putting two random things together. It's all in your head. Don't worry about it. Watch this. That name, use the same instructions. Together with that name, get that. And if that's not enough, what about talking about airports when Olav Mueller was being... You think they put their legal representation in there? What does Adam think? He doesn't think it's a big deal.
Wow, that is epic. That is epic. I mean, wow. Talk about
When I was a kid, I
tenacity
read
to
alt
get in there and
cypherpunks a lot
find
on
that
YouTube.
information. That is amazing. Well done, Alex. Wow. All right, on that exciting note, let's get into some 365 days of Bitcoin history. On the 19th of February 2021, the movie Silk Road was released by Lionsgate. I still haven't seen that one yet. About Ross Ulbricht, who was sentenced to life in prison for operating the Silk Road website. Ross is played by Nick Robinson in the movie. And that's that. 19th of February 2021, BTC continued to hit new all-time highs and surpassed the $1 trillion market cap for the first time. Then a year ago today, 19th of February 2024, Coinbase crypto payment portals dropped BTC support. So in other words, like they're not taking BTC as a payment because it's an absolute piece of crap, basically. On the 19th of February was day 10 of the Copa case. Stephen Matthews was cross-examined by a Copa lawyer at the London High Court, Satoshi Identity Trial, and Mr. Stephen Lee also was cross-examined. And this is what I put on that one. Stephen Spiral is Square is Block is Copa Lee initially claimed to be an independent lead at Spiral BTC. Later admitted that Spiral was funded and sat on the board at Block. Block was initially Square that changed its name to Spiral, and that Spiral was a member of Copa. Block is still advertised on Copa's website as a member. So he claimed to be an independent lead at Spiral. What an absolute joke that was. Honestly. I mean, you know, CSW's lawyers did literally rip them to pieces, but the whole thing was so corrupt. It's unbelievable. And check this out, a year ago today, on the 19th of February 2024, the FCA banned Bitcoin services to all UK customers. How dare they? They're a company. They've got no authority whatsoever. It's just literally a cabal operation. Unbelievable. Unbelievable. Shocking, not shocked. The FCA banning Bitcoin services to all UK customers. My. Right, let's just quickly, moving here, check this out. I now have a Lament wallet. So if you get yourselves a Lament wallet, you can choose yourself a handle. My handle is Satoshi SV. Because you can't have any handles that have been reserved on hand cash. So I had to create a new one specifically for Lament. But got my card. Check it out. Loving that. Put myself $1 in there just to test it out. 0.027 BSV. Loving that. Loving that. Lament's going to be massive. Absolutely massive. Let's have a look. Notifications, referrals. Oh. Great stuff. There we go. So you get likes, messages, subscriptions, content, pay to chat, tips, revenue share, creator and fan referrals, activity log. Hey, Beroshi started following me. Smilers following me. Loving that. Loving this. Hey, Bitcoin Maxi's in there. Love it. Love it. Cheers, guys. Nice one. Nice one. All right. Okay. After that excitement, let's get into the figures. I've got Gregcoin down at $96,000. B Crash, what a joke. Fisher Price Cash, who cares? Bitcoin at just $38 or 37.76 in the top left there. Let's have a look at the difficulty adjustment. Look at that. Still at an all-time high. The highest it's ever been. And again, they made such a big hoo-ha about the difficulty adjustment dropping the other day. Now it's back up again. Honestly, the press, the media around this stuff is full of absolute shite. It is utter garbage. Utter garbage. Let's have a look at the hash rate on Bitcoin. Steady as a rock. Yeah, and BCH doing the same. Let's have a look at the transactions. Still down at 45,000, representing 1.7%. It's literally nothing. 48,000 on what's on chain. Oh, look at the mining there. Interesting. All right. Networks again. As we know, block size and transactions are sanity. Network nodes and hash rate are vanity. They literally mean nothing without the block size and the transactions. So watch this space. Let's have a look at the block sizes coming through. Tiny, teeny, tiny. Look at that. 1, 3, 3, 2, 1, 2, 5. Or 5.9, almost a 6 megabyte block, but tiny compared to what we used to see in there. I suspect something big is coming. It's 80,000 times cheaper to transact on Bitcoin than Gregcoin. Mining Bitcoin at a 43.5% comparable loss. It's 1.9% more profitable to mine on Fisher Price Cash, like round up to 2%, and 0.3% more profitable to mine on BTC, meaning it's a 2.2% more profitable to mine on Fisher Price Cash over B Crash. Let's have a look at the politics because it's in the pie charts. Here we go. Global hash rate 7 days, global hash rate 24 hours. Gregcoin hash rate, Foundry USA pool 25, Amp pool 23, via BTC 13.8. Oh, there's no other miners on there. Ocean getting a looking at 0.69. That's interesting. Other miners is nowhere to be seen. Other miners normally tops up the hash rate just to make it slightly more competitive, and they're not there anymore. Wow. But they're still here on BCH. Other miners 57% on there. And Fisher Price Cash, who cares? Right, we'll just actually have a look at what's on chain because this is propaganda. They've literally only got TAL on there. So let's have a look at what's really going on. Whoa, TAL down in third position, 21.62. Kuv 28.3. And QD Link at 33.1. Oh. SA100 increasing to 12.84. Gorilla Pool down to 4.05. In effort. Crypto Quant, yep, the exchanges still getting rid of their reserves. Don't want to be holding that shit when the music stops. Let's have a look at the market cap of Tether. Weather. Oh, that would be why BTC has gone down a little bit. Because the overall bit of Tether has gone down, but probably getting rid of Tether just to pump it up again, I suspect. You know, ups and downs. I mean, nobody does anything with BTC anyway. It's not like those shitcoiners with shit for brains know what to do with it. Well, they can't do anything. They think that doing nothing with it is using it. How are you using it? How are you using it? I'm using it as a store of value. Right, so the value goes up and down. So when it goes down, it loses value. How can that be a store of value? Short ratio, where are we now? Oh, short ratio. It's going up 0.7. Just a little bit. Interesting. All these exchanges, not really too bothered about that. We'll have a look at the 24-hour trade volume on Zedixion. 6.8 million. Huobi, 5.1 million on Huobi. Or HTX. Yeah, Huobi. Let's have a look at Bitcoin versus Gregcoin. So Bitcoin just taking a hit there, unfortunately. As you'd expect, where the market is entirely manipulated. They just keep increasing the margin. Which means the potential that the genuine Bitcoin has got just keeps on increasing. Let's have a look at Bitcoin versus USD on Orange Gateway. Yeah, had a little rally and down and up and down again. Bitcoin versus Gregcoin. Yeah, as we just saw on DXS. Lagging behind at the moment. Satoshi Observer. Average transaction fee, 10th, 100, 7 thousandths. 7 thousandths of a cent. B crash is half a cent. BTC $1.06. Current TPS just 0.5. Cool. Still more than B crash though. That's hilarious. That's still more than B crash. Oh dear. Oh dear. You got to laugh. Let's have a look at the overall market then. Overall market of $3.1 trillion of absolute shite. 24-hour trade volume is that $96,047,811,085. Gregcoin 96,500. Trade volume just 1.8. It's nothing. Literally nothing. Representing $35 billion. It's nothing for something with a $1.9 trillion market cap. XRP, I'm really not bothered about what this is doing. Loads of people talking about it at the moment. Going up a little bit today. 24-hour high, $2.68, low $2.48. There's nothing in that at all, really. Nothing at all. Maybe they're just trying to, again, just trying to distract people away from Bitcoin. You know, by any means that they can. What's the next one we're going to pump? Oh, let's pump XRP because it's backed by the banks. Because these shitcoiners don't have an idea, don't have a clue about what Bitcoin is. Oh, what's this? Bitcoin now at number 87. $37.84. Yeah, it's pretty much spot on. Pumped a little bit this morning and then came down a bit. Alright. Okay, there we go. Right, that is a... Oh, jeepers, that's a 43-minute show. Wasn't expecting it to be that long. We'll leave it there. I hope you enjoyed it. So, as ever, if you enjoy these updates, please ding your donations for your appreciation to either Satoshi@Sendme.com, Handcash.io, Simply.cash, Relays.com, RockWallet.me or Senti.ch. We'll leave it there. I hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.